Welcome. In this video, we'll take a look at trends in capital raising in 2020 and 2021, starting with the big picture, which you'll see is quite rosy. We'll also look at the data behind that big picture to see who's accessing that capital, particularly among women and minority-owned businesses. Third, we'll identify issues we've heard that may be affecting the ability of entrepreneurs to access capital. And finally, we'll share some resources that the SEC's Small Business Advocacy team has developed to help with some of the challenges identified. Looking at that big rosy picture. In 2020, there were more angel investors, up 3.5% over 2019, with more deals per investor, up from 14 to 19. In 2021, angel and seed financings increased as measured by deal count and by value. Looking specifically at first quarter data year over year, angel and seed activity was similarly up. Turning to venture capital financing, 2021 saw a considerable increase over prior years. In the fourth quarter of 2021, VC funding hit an all-time high. Looking back at the first quarter of 2022, year over year, there was a slight drop, but still quite high compared to prior years. One could read numbers like this and think capital raising is easy, or at least getting easier, but that's not true for everyone. Let's take a look at where capital is actually going. Lead angel investors continue to deploy capital fairly close to home, within an average of 37 miles. So if investors are clustered in coastal hubs, so is available capital. Despite this, VC investments outside of traditional hubs is increasing. So who's getting that funding? Gender differences persist, with women raising about 93 cents on the dollar compared to men. That said, more women are seeking angel capital, representing just over a third in 2020 compared to 27.6% in the prior year. And their investment yield trended up from 21% in 2019 to 28% in 2020. We hear a lot about pattern matching and how diversifying capital allocators may help diversify the companies accessing that capital. Investors often invest in entrepreneurs who look like them. In 2020, 29.5% of angel investors were women, unchanged from the prior year. Looking at minority-owned businesses, in 2020, minorities constituted only 5% of entrepreneurs seeking angel capital, down from 9.3% the prior year. But their investment yield rate increased from 22% in 2019 to 33% in 2020. Looking again at the capital allocators, only 5.5% of angel investors in 2020 were minorities, compared to 7% in 2019. So underrepresentation persists. Let's explore the barriers for entrepreneurs seeking to build their businesses. Running out of cash and the inability to raise new capital is the number one reason startups fail. Most companies fail not because they don't have a great idea, service, or product, but because of financial barriers. And data shows that those financial barriers vary across demographic groups. Put simply, personal wealth sets the financial starting line for many entrepreneurs. Funding is often more accessible for those who own a home or have family assets. That wealth gap creates additional barriers to entry for many underrepresented entrepreneurs. Half of newer entrepreneurs cite networks and connections as a challenge, compared to 1/3 of mature businesses. Entrepreneurs whose friends and family are not in a position to invest, or whose network doesn't include accredited investors or those with relationships with venture capital or other funds, may find it hard to know where to start. It can also be difficult to navigate the regulatory pathways available for capital raising without the right network of investors. Another obstacle is insufficient information, education, and knowledge. Half of new business founders report this as a challenge in capital raising. That's more than twice the rate for entrepreneurs with mature businesses. In other words, even for the most technically sophisticated entrepreneur, whether biotech, app developer, or industrial innovator, the language of capital raising and the nuances of our complex securities rules are often inaccessible. The first step in addressing these challenges is to understand the data. You can find the data in this video and more in our annual report. Inclusive capital markets require more accessible capital raising toolkits. Our capital raising hub at sec.gov/capital raising provides a centralized portal for educational resources for entrepreneurs and their investors. You can also find the hub on the SEC webpage at sec.gov under the Education tab on the blue ribbon. The Capital Raising Hub hosts an interactive navigator tool that walks users through a series of questions to help them narrow down their options to raise capital. While this tool does not provide legal advice, it can help you better understand your options so that you can make informed decisions. There's also a cutting through the jargon glossary of common capital raising terms to introduce users to the language of capital raising. You'll also find our building blocks, a selection of one-pager style summaries that break down fundamental securities law concepts into plain language. Our capital trends maps allow users to see how and where capital is being raised across the United States. We invite you to explore these resources. The SEC's Small Business Advocacy team welcomes feedback on our tools and insights on challenges facing entrepreneurs and investors, whether you're looking for specific tools or grappling with policy changes. We look forward to hearing from you.